Good morning, good afternoon. Welcome to Benefits of Futures. I'm your host, Tom Schneider, CMT with NinjaTrader, and really excited to bring on the other host, Anthony Crudele. But before we do that, I do want to run through some housekeeping. I want to remind everybody that futures and options trading contains substantial risk, not for every trader. You could potentially lose all or even more than all of your initial investment. So that's why we recommend you use risk capital. What is risk capital? It's money that you can afford to lose. It doesn't keep you up at night, doesn't extend your retirement horizon. Also, I want to remind everybody that past performance is not necessarily indicative of future results, and that what we talk about here in this program contains neither trade recommendations nor financial advice, but is intended to be taken as educational purposes only. And with that, I would very excited to welcome Anthony Crudele back on the show. How you doing, Anthony?
Good. How are you guys doing?
Doing great. We had a short lead into the show, and I'm really excited to hear about your travels since we last talked, but maybe we'll do that after the show. You look great.
You too as well. And you know what? Actually, my flight got canceled after a 5 hour delay, and I couldn't get a flight out, so I wasn't able to go.
Oh no,
The
no.
one weekend I'm
Okay.
looking to get away, and of course the flight gets canceled.
Well,
Um,
well, we hear all those stories about all the flights being canceled, and we always think, oh, it's happening to the other people. But now I know somebody who was affected. I'm sorry to hear that. That's
I know
horrible.
it sucked, but we had a good time here this weekend because I got all my stuff done ahead of time, so I ended up going out and having a good time, like
Good.
vacation.
Nice, nice, good. Well, today I love the topic today. We're talking about order flow tools that you can use on the NinjaTrader.
Yeah, it's an additional package. I know I get a lot of questions about this because you and I talk about these tools a lot in the show, and glad to have a show today where we just really focus on these order flow tools. Specifically, two that I use are an essential part of my trading are the order flow anchored VWAP and the order flow cumulative delta. And I think before we even get to the charts and talk about that, one of the most important I think tools for day traders are these types of tools, specifically for futures traders, because futures markets, I know going back to its original reason why they were created, right, was, for people to hedge. That's what futures markets were for, right? And then as time went by, it created more markets that were really geared towards, trading, right? I mean, obviously the pits were formed around these markets from the S&P, NASDAQ, Euro, currencies, the meats, the ags, all of that. Those were all really commodities, but really centralized around pits, and there was just a lot of trading going on for those markets. Aside from just the reason why they were built, obviously, is for pricing of commodities and of course to be able to hedge as well. So as years gone by, they really become a lot more known for trading markets. And because there's so many people actively day trading them, order flow tools are really very important. I mean, some of the best traders I know use order flow tools in their day trading. I think it's going to also depend on how active of a trader you really want to be. I think that for what we'll talk about today for order flow, the ones I use are not ones that are going to make you super active, but they will keep your attention more on the minute by minute chart movement, but not necessarily maybe by a tick by tick movement. So I think that that's just also important to know that order flow tools can be used for really super short term, depending on how you want to go about your strategy. But also you could expand them out a little bit and use them just the way that I do to get a good glimpse of what's happening in the market.
So, Anthony, these tools, they really came about with the advent of the ability to pull this information out of the market through the use of computers, right? I mean, this is all electronic data that we couldn't really get, at least to this detail, in the pits. But the pits did have similar information, although processed in different ways, right? So if I'm looking at order flow, like the cumulative delta, maybe we'll talk about it when we get to each individual study, but these actually kind of are substitutes for things that you might have experienced in the pits, although you might have heard it with the volume of noise, right, rather than the volume of red and green lines on your screen, if that makes sense.
Yeah, absolutely. I would say that this is really truest to the oldest form of how pit traders traded. If you go back to when I was in the pit and when I had first started, if the pit was quiet, we all knew not to really put our hands up, so there was just not a lot of people actively putting in a bid or offer. There might have been a few people, right? And the S&P 500 had somewhere around 500 people in there. And there would be times where there'd just be one or two people bidding and offering on it, and the market just wouldn't move much, right? Obviously, current day with the electronic, there's always been an offer there. It didn't mean that there wasn't one in the pit, but it was just like we kind of knew it was just sitting there. And unless it was going to, we knew that there was just that offer sitting there and that bid sitting there. So unless somebody wanted to take it out, it was kind of quiet. And then when we started to recognize order flow, was we always had, the corners of the pits that we looked at for who were the people that were going to come in and potentially do a lot. And that wasn't something we really looked at from the locals. The locals were just the traders in the pit because the local could stop at any point in time. A local doesn't do something, doesn't have to do something, is the best way to describe that. A broker has to do something. So when you see order flow come in big amounts, that person has to do something. That goes back to why beginning of the months are very busy, because a lot of people have to do something. End of the months, people have to do something. Opens, people have to do something. Closes, have to do something. That's why you see a ton of order flow on opens, closes, and on specific days. That's because brokers or big funds or whatever it is that they're doing have to do something. And when they do, they leave that footprint, right? They have to come in and do something, and they can't hide from that, right? You could just look at a normal bar, and that normal bar will just look like it went up or down. But with volume, order flow tools, it leaves that footprint. So you could see how much was really done within it, how much was being absorbed, or how much was able to push price through, the distance, right? So what did it take to get there? And was there a fight? And all sorts of different things that happened. So in the pit, it was where all of us would look at it and see if all of a sudden Goldman Sachs or Merrill Lynch comes in and is like, to even bid on 100. We're like, okay, maybe they're only buying 100. All of a sudden they're like, someone's like sold, and they're like, two half on 100, three even on 100. Now they probably have to buy 1,000 or more. So that's just order flow that's coming in. And so as a trader, you don't want to be on the opposite side of somebody who's going to continue to take out all the prices, and you don't know if somebody's willing to fight it at those prices. So it just can keep going. And that same concept came, and when people started to look at these order flow tools.
Awesome. Great. So you mentioned two tools, one that we use, a lot on with the opening range and the bars closing shows. Jim and I look at the anchored VWAP or VWAP, depending, tomato, and then the cumulative delta. And we've been asked about the cumulative delta, and we don't really use that. And I'm kind of interested to see how you use it, because from a quick look at the chart price and the cumulative delta, they look like they trend the same way. So I'm curious to know what are the details that you're seeing. Is it a confirmation tool, or is there something that might tell you that, hey, something's up here, something's going to change?
Yeah, let's actually go to the charts now. And I just pulled up what is available. So with this order flow package, obviously you contact Ninja. If you don't have it, it's an additional add to the regular Ninja package. So you have cumulative delta, you have the market depth map, you have the order flow trade detector, the volume profile, which actually is one, maybe we'll even add that today, because that's one that I actually like to look at as well. And I'll leave that on the basic settings for now. And then you talk about the order flow VWAP, right?
Right.
So we'll go, okay, here, we'll add these, and you can actually see, I think we got the volume profile. I'll look to see if maybe that's just adding right now. But let's start off with the order flow VWAP, because to me, it's the easiest one, right? We talk about it a lot in this show. I know a lot of people use it. It's probably one of the most popular indicators out there. I think it's definitely become one of the most popular indicators out there. And when you look at the order flow VWAP, I look at it in the simplest terms of I think the important part is, where do you want to anchor it to? I think that's the one thing I look at it as and say, at what point do you want to see the volume weighted average price start at? And that's what will develop. I think this is a good tool for you to use. I think some people will just look at it on a 24-hour basis. They'll look at it, maybe from like this morning, like if you had news this morning at 8:30, which we did, you could anchor it to that point. A spike or high or low, you could anchor it to that point. There's a lot of different ways, thought processes that go into anchoring it. And to me, what I like about this tool is because when you look at a moving average, most people are going to look at the OHLC4 or OHLC3, and they'll look at, that would be what they would use for getting as much information on a moving average. When you got an order flow VWAP, you can anchor it to that point. And actually, I'll double click here, and I actually have the standard deviations up, which I think is another really cool thing, right? And I want it to be updated on every tick. I want it to be starting at the beginning of the day, because going back to what I said about day trading and futures markets and how this was like one of the original ways that the pit traded, I like regular trading hours for order flow, because to me, that's when the true order flow is coming in. I think overnight, if you want to trade that session, you can maybe just anchor it for the overnight, because there are two different rhythms to that. I think blending them together, I don't think is as effective. And then I like to use the standard deviations around it to show me, what this market is doing from a specifically anchored price, which I think is the open, because of all the reasons I explained. And when you look at it today, anchored to the NASDAQ to the 3-minute bar open. Actually, I got Bollinger Bands up here. I'm actually going to remove those just not to complicate things on here. Remove them. Okay, just so we have the order flow tools up there. And to me, this is a great way to see how is the market responding to the volume weighted average price, right? Is it holding above it? Is it holding below it? Is it getting above my 3-minute high or low opening range for the day? It gives you such a better representation than just a moving average. So as a trader, what I like about this tool is I could see strength of trend coming from multiple sources, volume and average price versus just average price. And you also can use these standard deviations that I have here, and I just have these up, a basic 1, 2, and 3 standard deviation moves from this volume weighted average price. And it tells you how strong of a type of a day it is around that average price, that volume weighted average price. And it's just a great tool to visually see. If you look at it today, the NASDAQ is in that second, right near that second standard deviation, holding above the first and really supporting above that volume weighted average price. So it gives you that sense of using a really simple tool, but a really good sense of what type of day it is. Very hard to be short on a day like today, right?
Right.
What's happening?
And so just to be clear about the volume weighted average price, this is different than a moving average, right? A moving average is just taking a price and you're averaging so many bars, 20 bars back or 50 bars back. This is actually a cumulative average from the beginning of, when Anthony talks about anchoring, it's the beginning, the first bar. As soon as we anchor, we're accumulating all the trades. And really what it is the volume at the price that trade is enacted. Then we've got a weighting based on the number of contracts traded at that price. So it's not just a standard easy, let's take the average of close prices. This is actually based on the volume traded at each price. So it's a pretty intensive calculation, but it's more representative of what's happening in the market.
100%. It's proof, right? We go back to what I had said. Everyone knows who Goldman Sachs is, right? When I used to stand in the pit, I used to look at them. If Goldman comes in and just steadily buying, and you see them continuing to buy, you can feel that the order flow is coming into the buy side. Obviously, if the market's moving up, and there's obviously going to be other factors and other brokers and other people buying as well if we're moving up in price. But you can see that somebody is really coming in and dominating the tape in the direction of the move. When you are holding above that, that's showing how much is being done above that volume weighted average price. So it shows you really the strength of what's happening above the average. So it's such an important piece of what's happening intraday that when you try to go against what's actually happening in a day. You're not only fighting average price, you're fighting volume, you're fighting multiple things. So I always look at it as this. If big picture is telling me to counter trend an intraday trade, make sure on the short term I have multiple confirmations or try to be as far on the edges as possible. So what do I mean by that? So like on a day like today, let's just say that I'm bearish NASDAQ coming in, which I am still on the bigger picture. When I come in and see a bullish day, I look at it and say, the only way I can be short is really around the 3 standard deviation. Maybe you throw in an RSI, you throw in something else as a confirmation to help you go against trend in a very small manner, because you're going against an intraday trend, which is competing against a bigger picture trend. And you don't know who's going to win and potentially inside that day. But this volume weighted average price gives me the ability to understand what type of day this is against that bigger picture. So it's just, that's why I think it's such a very valuable tool.
And so when you're looking for those inflection points based on your bias, like today you said you're bearish over, longer term. So you're looking for either bearish indication to go in, but if you get the bullish, you're looking for those extremes. Do you ever look at those bands as trade inflection points? So you mentioned the 3rd standard deviation. Let's say you did get the 3rd standard deviation. When the market comes back, let's say it's mean reverting or whatnot, Trump wants to get back to the VWAP. Are you putting in targets at those other standard deviation bands, or are you looking for some other clues to put in your targets?
Well, when it comes to strategy, I will look at it like this. If I'm bearish, which I am, I'm a bearish S&P, bearish NASDAQ right now, on stuff on a daily, and that's just on my homework. That's the way I look at the market right now. So I only want to look at shorts. Very seldom right now, intraday, am I going to take longs. So what I look at is where would be the opportunity to be short. I look at what my bigger picture stuff is setting up. And I always say, well, anytime I'm counter trend trading, I'm only looking on the edges. The edges are where the opportunity is, just because my risk is cheapest there. And by cheapest, I mean distance of stop. So like anytime we're 3 standard deviations away on a volume weighted average price, where we're above it, like essentially today, but we're in a bearish overall trend, that 3 standard deviation above it gives me the cheapest risk looking trade. I only will look at it there, and I will add another indicator on top of it, such as an RSI, which I've talked about a lot in here. I don't have it up today because I really want to focus on the order flow, but using this as like my starting point with that order flow anchored VWAP, that 3 standard deviation, until it starts to get up in there and I have confirmation, I'm only going to look at shorts. Coming into every day, my big picture sets up my short term. On a day, I don't like to trade 2 sides of the market too much when I think that one side of the market on the bigger picture is the primary trend. And I still think that the bears are in control. So therefore, I just use a tool like this to say, look, if I came in today, obviously bearish, and we're rallying, I just sit back and wait. Maybe we go up there and touch a 3 standard deviation. Maybe there is an RSI oversold. I would think that because the big picture supports bearish ness on the still as the bigger picture look, maybe we have a return back to the 2-1 standard deviations, or even back to that order flow anchored VWAP, because I just don't think it's a day where it'll stay too far pinned away from it. But I use it as a very tight risk on the edges. I can't say this enough. Anytime you're counter trend trading intraday versus the bigger picture, look to be on the edges. Don't trade in the middle. And these standard deviation bands really help me stay away from trading in the middle. Like one violation of the order flow anchored VWAP, if it were to get below it, it doesn't mean I'm just going to be short. The best place to be short is the furthest away from it, so I have opportunity to come back to it.
And is this, we talked before about go big, go small, or not at all. On a day like today, if you do get to those edges, it might be a go small, right? Because you're not trading with the overall trend that you see. You're bearish on the daily, and we're looking bullish. Maybe go small for those reasons.
Exactly, and multiple chances added to where I might get nicked up and stopped out a few times, and all of a sudden I catch one runner and the thing blasts at like 3 o'clock. It takes all day to finally break, and it happens. We've all been there, right? And all of a sudden you're just spent out because you go full size in on the first test. I know from doing this so many times the wrong way that when it gets up there, I'm like, sell them small. This is the beauty of using like the micros. You can go in there and be really small, and maybe you're wrong a few times, and all of a sudden the one that's right either makes your whole day back or makes your day to the upside. depending on how you manage risk along the way. But something else I want to add into this, and which is where you're going back to where you said like the order flow cumulative delta, right? So what is the order flow cumulative delta? Is the net, what's been bought and sold on the bid or offer, and what is the net number? Going back to the beginning of what I said is, if there's somebody like a Goldman Sachs who comes in and buys 1,000 contracts, but yet locals sold net, so many on the bid, like let's just say they were one even bid on 100 and somebody sold them 50. And so then that would be, they bought 50, 50 was sold on the bid, and then they take that other 50 up and sold it on or bought it on the offer. That would be a net zero on cumulative delta, because somebody hit the bid on 50, but then they didn't get filled on them, and they took the 50 up and bought the offer. So it would be net zero. But if they all of a sudden just go buy 1,000, and they're like 7 even bid, there's someone's like there's 500 and 7.5, and they go buy them, that's 500 that trades on the offer. So that means that takes that cumulative delta higher. So it's the net, right? So what I like to look at this is reinforcement. Are we making highs with people buying more into the offer, or are we going up there and we become more net neutral in what's happening, and they're actually starting to see a fight? Are people actually starting to hit the bid? When we're making new highs, like you go up and make a new high by a tick or two, no new high in the order flow, all of a sudden somebody hits the bid, we're back down below. So I look for divergence. Look at today. Let's just take a look at this from earlier on, right? From the open, you had selling, right? Then we made a higher high right here, right around 940. And we make a higher high, and we make a higher high in delta. Delta stays pinned. So you see, as we're going higher, people are fighting it, right? Because the delta is not really growing much. And we go up and blast and make a higher high. And the market basically is just now delta is the same. So you have this reversion back really quickly. Why? Because what's happening is people are chasing the offer, and at the same time, people are hitting the bid. So you're staying in a very net neutral situation here. So it looks like it's similar here, but overall what's happening is the people that are chasing the bid higher most likely are getting trapped in a situation like this. You're 2 standard deviations away from the VWAP on an overall primary bearish trend. And all of a sudden you just have this ripping lower, and now they're doing the same way to get out the way that they got in. 50.5, even bid, sell you 50, and all of a sudden it's like even bid at a half, buy 50, and it's just saying net neutral. So what that tells me is that it tells me that no one's really dominating in the flow. And that's important because they're not really building on buying on the offer. Where you see, you want to see, anytime when you're looking at order flow, you want to see who has the stronger hand. And at this point, you don't really see it. And then you start to see them really start to buy the offer in here and make a higher high in order flow, but no higher high in the market. So the market is now trying to absorb it, because they're like, hey, fool me once, don't fool me twice, right? And then all of a sudden the shorts are trapped and we make a new high. I mean, this is just what happens in trading, right? Then we make a new high and everyone's like, well, do I buy into this? Not really. It comes off. Now we go up and grind higher, where we're almost net neutral in the delta. We're from where we were back here, but no higher high in delta. And it just tells me, what this tells me ultimately, and I don't want to get too complicated in it, is that no one really, they want to buy it, but they're getting trapped and it's rotating down. So it's hard to hold for the day traders. So ultimately, you're not seeing like a day where somebody's just coming in and just wiping out the offers. If you did, you'd see that just really dominating to the upside. So people are playing it smart. So you're probably going to have a chop to grind type higher day today. And that could change, because when the longs are getting trapped, they're basically all of a sudden they start to hit the bids and they come off really quickly. And that's what it's looking like in the NASDAQ, versus a day where it might just keep building and building and building and building. And the shorts are just sitting there going, God, they filled me on everything I've wanted, but we can't rotate lower. And then all of a sudden the squeeze just continues higher. This is something where you look at context and nuance within the market. I think this is where, when you look at order flow, somebody might look at this and say something completely different than me. But for me, in my experience, this is the way I look at order flow.
So, you talked about building and building and building. That could have been yesterday, right? As we saw, yesterday was just like a kind of a slow, steady drumbeat. It could have been, similar to that, right? We didn't see a lot of divergence in yesterday's cumulative delta flow. Order flow, what do we call it? Order flow cumulative delta, right? And it just kind of reflected the market. So, maybe not as helpful in terms of identifying trending points, but could be confirming, right? So if you're said, hey, we've been above the VWAP all day, this looks like it's trending. The cumulative delta is showing me that too. I'm not seeing anything really out of line there.
Perfectly said. Go back to yesterday. It's the perfect example of what I was talking about. You have an opening range here. Market's kind of fighting it, pretty much neutral up until this point right here at the VWAP, right? And then you start to stay above the 1 and 2 standard deviations, right? And just look at here. Even on a day like yesterday, can't get above the 3 standard deviation because it's just a big move away from an intraday order flow VWAP on a bearish overall daily market. Daily chart would tell me that we're bearish. So it's just like that's where the opportunities were short if you wanted them. So you could have made money short yesterday. Didn't look like it. It was too easy. You got to be super, super patient. But if you waited for those 3 standard deviation looks, the stops were relatively tight. You got rotations over. You're picking up crumbs, but sometimes that's just all that's there if that's what you're looking for. But look at the build. So you see this higher high, higher cumulative delta, higher high, higher cumulative delta. It just keeps building. When I see that, that's very significant. And obviously it's a trend up day. And you just don't fade it. Like if I see that, I'm not even really looking to sell standard 3 deviations because it's just this is a very different look than we see today. Today is like, hey, I want to buy them. No, I don't. There's a lot of weak hands in it, and it's understandable because of what's going on. There's macro stuff coming up. I think next week's a very interesting week. We're not going to get into all of those types of things right now, but once you see this set up in the order flow, like this type of day versus today, you can see today I feel is like going to be up, rug pull. Oh, it's still bullish. Let's buy them again. And then maybe all of a sudden later in the day, there's a break that's significant that goes all the way back to the VWAP, and you just don't know, right? I mean, it's going to be challenging, but I think that this is the exact look that you mentioned.
Right. Right. And then today, can we just really quickly, when the last couple of minutes we have, go back to today? There's something I just wanted to maybe ask you about or get your opinion on. And that is, I'm looking right at cumulative delta right now, and I'm seeing that the highs aren't there, right? We're making lower highs, right, in the cumulative delta. So I see a trending market. I see higher highs on the price. I don't see the higher highs on the cumulative delta. How far back am I looking for that confirmation? Is it a couple candles, or can I look and say, well, that high at about 1020, that area, you have a kind of a 2 highs right there, and then it came back, it retraced, and now it's in a slow and steady uptrend with a new high just in the last candle. But I'm not seeing that on a cumulative delta. Is that something I would say, this could break to the downside because of that divergence? Or am I waiting more confirmation down?
Once I go back to, on this type of day, yeah, I'm more inclined to take the short on the 3 standard deviation, especially with like a momentum indicator telling me that we're overbought. Like that, I love that. I love an overbought look on a day like today, because that will give me an opportunity for a very cheap. When I say cheap, I don't mean dollar cheap. I mean point cheap, right? So like sometimes I'll blip up and hit that standard 3 deviation. I'd probably put a 15 to 20 point stop in for a NASDAQ. And that to me is about as tight of a stop as I'll ever put in that market. And I can rotate out of that really quickly if it either works right away or doesn't, right. Versus like yesterday, I would just be like, I almost have to see it violate the standard 3 deviation, come back in, really wait for it to be overbought. RSI starts to come back down, or whatever momentum indicator, then maybe step in with a small position and lean on that high. And that's just a much harder trade. Right. Today, I'll actually step in a little bit because you can see it. I go back to it. Today, there's a lot of weak hands on the rally. So that means that everybody is looking at it saying, I want to be long. I'm buying into the move when it goes higher, and all of a sudden it doesn't happen. Everyone's like, get me out. No one wants to be the last one hitting the bid. So that's my feeling when I see that.
Awesome. Anthony, this is great. We're right up on time. Thanks for coming. Where can people reach you?
Just go to @Anthony Crudele on Twitter. Everything is there.
Awesome. Thanks again. It's always a treat talking to you. And thanks to the viewers for finding us on YouTube and at the ninjatrader.com/events page. Hit that like button, hit that subscribe button. We'll be back with Anthony in 2 weeks. In the meantime, have some great trading days. Talk to you later.
See ya.